Welcome back, everybody. Today is July 1st, 2026. So we're going to go over how our Roth IRA portfolio did in the month of June. So currently you can see it's at $30,826.86. Now that's pretty darn close, pretty on the nose of what last month was. So basically trading flat, but keep in mind we've been depositing like $500 since then. So realistically, we lost some gains since last month, but that's fine. We had a really good June. So we'll see that today we're down $304. That's about 1%. Market's kind of taking a breather. Look at the week, up 1.7%. But look at the month, down 2%, which in terms of the market, that's $635. 3 months, up 19.5%, which is why I'm not too concerned about the market not doing anything crazy this month. Year to date, we're up 14.85%. 1 year, 26.81%. And since we moved over to Robinhood, we're up 46.5%. And that was in, let's see, April of 2024. So great progress. Really, I don't have complaints here. Love to see all that. Let's look at the equity of our positions. We got QQQM and VU. QQQM takes about 60% of the portfolio, VU about 40%. Kind of more driven on that growth tech stock wave. It's kind of what we've been doing for a couple of years, and we benefited from it greatly and outperformed the S&P. So we see that we have $19,248 in QQQM. $11,580 of VU, and that makes up our total balance in the portfolio. Look at some of our contributions. This was when we transferred over and how much we made in contributions of 2024. 2025 we made $4,300, and currently we're at $1,200. Now I do deposit all the way up till May 15th, so that kind of explains maybe why it seems like we're at a slow start to the year. No, we've been consistently putting in $100 into the portfolio every single month, and we're hoping to increase that, but nonetheless, we're just going to keep working at it. We can see we got that 3% IRA match from Robinhood Gold, which is $36 free that Robinhood gave me to invest into my Roth IRA portfolio. So next, we're going to look at some of the hot topics that happened during the month, some tickers, some general macroeconomic news as well. For this, we're going to use software I developed, AuroraFinancial Pro, to look at some stock news and see how stocks have performed. First, we're going to be looking at Apple. And we can see the reason down here, Apple prices for devices increased $100, $150 each. And that was mainly iPads and Macs. No current changes were made to the iPhone, but I wouldn't be surprised with the next rollout of iPhone for that model to be increased in price, which I think is the 18, and then the 17 to probably also take an increase in price, just because they normally like two models at the same time. So we can pull up Apple stock to kind of see how it did. Let's load in some of this data here. So we can see up 1 year, they're up 42%. Okay, and that's very good, right? Great return for 1 year. If you look at 1 month, they're down 7%. And earlier in the month, they were trading at $315 per share, and now they're all the way down to $294. And you can see that even here, they dropped down to $275. So this was more looking like a 10% drop for the month. And the reason why this is a huge deal, Apple isn't really known to do this. They have a pretty standard pricing structure when it comes to phones. Maybe every couple years they increase it $50, or they make a super big innovative change, like I'm thinking something like the iPhone 10, then they start looking at increasing the pricing. But considering how the phones have stayed relatively similar year over year, and you expect their manufacturing to improve, be more streamlined as they develop more of their own like chip manufacturing and such, you would expect the prices to stay, pretty stagnant right now. But due to high cost of storage currently, Apple's actually been really pressured because they got to pay for that storage. They make their own chips, but it's becoming more expensive overall. And this is kind of just a hint towards the price of compute. And that's seen all over, not just in Apple, but, any like company that uses chips, like, Tesla when they make their cars, or any of the modern cars, or if they're developing computers of any sort. Something like Intel is profiting off this very well because they can charge their consumers a lot more. And this kind of comes back to the whole compute being sold to companies and AI data centers being developed. All that costs a lot of money, and they've been buying up these, CPUs, GPUs, chips, everything in between, just to make ends meet on these large construction projects that they're trying to do. So it really all comes back to CapEx spent by these multi-billion-dollar, trillion-dollar corporations, and that's now you can see kind of being passed on to the consumer. So if we look at, maybe some of the news overall, let's see, 95 a year fee nobody notices. Yeah, let's see if we got anything here. Yeah, tech. Yeah, this was earlier this month. Yeah, the price dropped today. Let's see. Yeah, across the board increases add uncertainty to consumer demand. Global notebook shipments forecasted to decline 13.6%. So yeah, I mean, with increased price, they're going to see a lot of consumer pressure. I mean, Apple is already a premium product. People are being stretched thin. So when, they go to school and they need a new MacBook or a new phone or something, a new iPad to take notes on, that's going to be kind of felt when you look at the competitors. And it's very interesting timing considering they just released the Apple Mac Neo, their new MacBook model, which is a budget model, and they already had to increase that $100, which, for a more expensive product, that's maybe like $1,000, half or $2,000. That's not a lot. But if you're selling a computer for $499 and now it's $599, student discount, that's going to be felt a little more. It's a larger percentage increase. And Micron is kind of the company that is profiting off of this. So at the same time, while a company like Apple is struggling, a company like Micron is going to be flying up. I mean, look at this. 1 year up 755%. That's faster than like a company like Nvidia was growing at the peak. So this is something to keep in mind. At the same time, one company's lost, another company's gain. And Apple kind of pointed how a lot of this comes from storage, and they said that the day that Micron, reported great earnings and popped off at the same time. And then Micron basically said, "Hey, you had years to be buying these chips. We said that we were at a low price for them, and you should have been buying them." And Apple didn't really respond to that, but it's a good point. They maybe should have forecasted, "Hey, chips are very cheap right now. We should be buying these for future expansion." At the same time, no one could expect such a pinch. So that goes over Apple. Now let's see, SpaceX. This is a kind of obvious one, and I want to make a separate video on this, and I plan to this week about the valuation. So yeah, if we load in, I mean, it's only 1 month really of data to look at here. So they IPO'd at, I think it was about $150, but we can see 160 here. And it peaked at 211, so it was flying up that first day. First, 2 days, people were really going crazy on the price. And then right here, I think, is a 16% decrease in one single day. A lot of people selling off, and now we can see they've been kind of stagnant. So the thing about SpaceX, it's very interesting. Elon Musk obviously is the reason why it's so popular, right? I mean, there's 3 basic industries to it. You got, X, AI, Grok, all that good stuff. That's one sector, and that's your AI models. You got the space exploration with SpaceX shooting rockets into space and bringing them back down. And then you also have the connectivity, which is Starlink, which is their main profit driver per their reports. And people are, the IPO valuation was at $1.7 trillion, which is kind of crazy. This company surpassed Amazon. I think maybe they're below it again, but briefly surpassed Amazon. And that's with the company not being profitable. So people are forecasting a lot of growth into this stock, to say the very least. I would say they're expecting just a super crazy, unreasonable amount. I think the one thing that's got going for it is Starlink. I think Starlink is very, very interesting. I think there is something behind it there. It can grow fast. It can be great, consistent monthly revenue. The other 2 segments, I'm not as sure, but at the same time, Starlink could be a great business, but it doesn't mean it's worth, 1.7 trillion. So I have my concerns with that, although it's something interesting. I'm going to keep an eye on and just probably make a video, talk about it. And then, 2 things we can kind of look at here. The Fed chair, Kevin Warsh, so he's taken over for Jerome Powell, who's been in the position for years and years, and his whole thing was the dual mandate, and that's kind of what the Fed's known for sticking for, and that's what they're going to continue working at, because that's their dual mandate. They want to, keep unemployment low and also keep inflation low at the same exact time, or at a monitor level, 2 to 3%. Kevin Warsh is flipping this on its head a little bit. He's saying, hey, unemployment, we can kind of rock with it. It's not as bad right now, although it's not that good necessarily. So he's saying we're going to mainly focus on inflation, and that's kind of coming off of our oil shock that we had, not just this month, but last month, June and May. in that oil shock, causing, I think the CPI was up to 4.1 or 4.2%, up from, I think, getting about 2.4, 2.5. So the CPI was really in track. It was on track for rate cuts, and kind of the whole war with Iran, bombing their oil facilities, closing the Strait of Hormuz, all of that together made it so basically the Fed's going to have to raise rates, which was very unexpected. We were forecasting 2 to 3 rate cuts. Now we're expecting a rate increase. So yeah, I mean, not the best. I just got a house. I'd like to refinance, but yeah, we'll take what we can get. We'll see. I don't know if we can pull any oil contracts off of here. But let's look at the current price of oil. So yeah, we can see that oil was peaking at, let's see. Yeah, this doesn't even show up properly. Yeah, okay, there we go. Yeah, so $113 per barrel. Absolutely insane considering we were trading at a low of about 58 here, right? 57, 56. And even before the whole Iran war was going on, we were kind of trading in the 60s. And this is like fairly, local time lows. This is really good data. I mean, if you look at 5 years, oil prices down, gas prices were down, but then the Iran war really just kind of shocked us up. And at the end of last month, this is kind of where we're sitting. We're sitting at this, high $113 per barrel. Since then, it has come down greatly, $66 per barrel, which is pretty darn close where we were trading pre-Iran war. I mean, we're still in the war, right? But before that, we were trading at about 60.5, $66 per barrel, and now we've come down to that point again. With that being said, we have a lot of delay when it comes down to it of tankers, getting across the world back to the U.S., back to other countries that maybe will be redirecting oil transports to the U.S. You got months of recovery basically for this. So before the end of the year, I'd expect prices to come down. But quite frankly, 2 or 3 months, maybe we'll see prices at the pump coming down. But the Strait of Hormuz is not fully open still. I mean, there's deals every other day apparently of it opening back up and war being ceased, but then bombings happening. It's all very touchy and very sensitive, but the point being that we're just going to see this high in consumer price for the majority of things because everything has to be imported in, and that's just going to lead to high inflation, which is going to lead to higher rates, which is going to slow down economic activity and also bleed into the financials of every single company traded on the S&P, the NASDAQ, any publicly traded company that is utilizing debt, which is a large majority. So it's just going to be that pressure on our returns that we're going to see in our portfolio. I think it was Warren Buffett that described interest rates as gravity to the stock market and returns, and I would agree with that. It is just gravity. It's going to slow things down. But nonetheless, it seems like maybe there's some hope at the end of the tunnel because prices are coming down quite greatly. Now, with all that in mind, let's just do a large recap of our portfolio, not just how we're doing now. So we can see we started investing in 2021 when I turned 18, opened an account with $2,200, and consistently invested. Well, not the most consistent at the beginning, but we were working on it. We were putting money in slowly but surely, and we've kind of increased that rate as time has gone by. And we're going to continue doing that, continue feeding this portfolio and making it grow. We can see here, the green is my balance, the blue is what SPY would be if I just invested in SPY this whole time, and the red is the accumulation of my contribution, so just how much money I put in since the inception of this portfolio. We can see that, we're basically trading at all-time highs on our portfolio value and also profit, but down just a couple $100. So we're up to $12,917 of pure profit in the portfolio, which is great considering we've kind of kept contributing over time. And starting in my investing career, we were down a couple $100, which was a lot of money at that time. And we can see this difference between what the S&P versus my portfolio would be, in that we're currently outperforming the S&P by $2,100, and a large amount of that came in May and June when we were just seeing high valuations on a lot of these tech companies. So all great stuff to see. Let's see our positions here. QQQM and VU here, and you can see it in pie chart form. QQQM has been outpacing VU, so we need to start actually contributing more to VU. Although maybe it's slower growing right now, it is how I just want my portfolio to be structured, considering this is a retirement account. We have some old closed positions. I like to start looking at stocks I want to buy. I've been doing videos on analysis, but nothing's really struck me as a crazy buy, especially in this frothy market. But portfolio balance up here, contributions, profit down there. We can see 71% total return on our money. So all great stuff to see. Very happy where the portfolio is sitting at. Next month, I'm feeling pretty optimistic about. I'm thinking, maybe some small growth, but I could definitely see continued pullback. So keep an eye out for the SpaceX video I'm going to come, talking about the valuation, go over just how the company works in general and their numbers, because not a lot of people are talking about the numbers. So tune in for next one. Make sure to like, subscribe, and share the video, and I will see you guys later.